As we close out 2025, it's clear this was a year of wild swings and deep uncertainty. The financial world was on edge, with investors and analysts alike struggling to keep up with the relentless pace of change. The stock market's dramatic ups and downs were driven by a handful of tech giants, especially those in AI. Their rapid innovation and unpredictable earnings sent shockwaves through global markets, making every headline feel like a turning point. Meanwhile, policy decisions in Washington sent shockwaves through the economy, culminating in a record-setting government shutdown. The political standoff lasted longer than anyone expected, paralyzing key institutions. The shutdown halted economic data collection, leaving experts and investors flying blind. Without reliable numbers, even seasoned professionals found it nearly impossible to gauge the true state of the economy. This chaos wasn't random. It reflected major shifts at home and abroad. Global trade disputes, new regulations, and technological leaps all collided, creating a perfect storm of volatility. One week, markets soared on AI breakthroughs. The next, they tumbled over trade disputes or political gridlock. Investors had to adapt quickly, as fortunes changed overnight. The dominance of a few tech companies made the market's fate rest on their shoulders, creating new risks. Their influence grew so large that even small missteps could trigger global consequences. If these leaders stumble, the ripple effects could be massive, impacting everything from retirement accounts to international trade. The shutdown reminded us how much we rely on a functioning government and reliable information. It exposed vulnerabilities in the systems we often take for granted. The themes of 2025, policy uncertainty, AI dominance, and sudden shocks, are evolving, not disappearing. They're becoming the new normal, shaping how we think about risk and opportunity. They're shaping the foundation for 2026's trends. The lessons learned this year will echo into the future, influencing strategies and decisions for months to come. Understanding this recent history is key to making sense of what's next for the economy, markets, and digital money. Only by looking back can we prepare for what lies ahead. Let's dive into the forces that will define the year ahead, and explore how these powerful trends will continue to reshape our world. In 2025, the production for security movement, known as PROSAC, gained significant momentum, and it's set to accelerate even further in 2026 as more countries join in. Countries are now prioritizing making essential goods like semiconductors, batteries, and advanced electronics at home, aiming to reduce reliance on fragile global supply chains that have proven risky in recent years. The pandemic and rising geopolitical tensions exposed deep vulnerabilities, prompting governments to invest heavily in domestic factories, data centers, and rare mineral mining, laying the groundwork for greater self-sufficiency. This shift isn't just about national security, it's also about creating jobs, gaining more control over supply chains, and shaping the future of local economies. Reliable electricity and robust energy grids are now seen as the backbone of this new strategy, supporting everything from manufacturing to data storage. As we enter 2026, expect new policies and corporate strategies to focus on securing critical industries, even if it means accepting higher short-term costs and rethinking old business models. The era of chasing the absolute cheapest production is ending. Now, stability, resilience, and national independence are the new priorities for both governments and companies. This transformation will create new opportunities in strategic sectors, but it will also bring fresh challenges for consumers and businesses as they adapt to a changing landscape. The trade-off is clear: higher costs now in exchange for long-term resilience, security, and a more stable future for all. Optimism is high for 2026, with tax cuts and deregulation expected to inject billions into the economy. More money in people's pockets and corporate coffers could fuel growth, hiring, and investment. But not everyone is convinced. Tariffs are raising costs for businesses, potentially offsetting the benefits of tax cuts. Critics warn of an I-shaped economy, where a few at the top thrive while most just get by. There's concern that extra cash may go to stock buybacks, not job creation. The debate? Our job trio. Will stimulus drive broad prosperity, or just boost the already wealthy? This tension will shape economic policy and market performance in 2026. The outcome depends on how these forces balance out. The stakes couldn't be higher. In 2026, AI's story shifts from invention to widespread adoption. The focus is now on using existing AI tools to boost productivity across industries, from healthcare to manufacturing. Everyday work is being transformed as companies integrate AI into their operations. This practical use of AI promises significant economic gains. Meanwhile, the race for sovereign AI is heating up. Nations are investing heavily to build their own AI infrastructure, from chip supply chains to data centers and proprietary algorithms. AI is now seen as a pillar of national power, not just a business tool. Government investment will accelerate AI's spread and impact. The global competition for AI dominance is just beginning. 2026 will be the year AI becomes truly mainstream. The stock market's fate is tied to a handful of AI-driven tech giants. Their success has lifted the market, but this concentration brings big risks. If AI spending slows or expectations aren't met, the fallout could be severe. Even minor disappointments can trigger sharp sell-offs. The pressure on these companies to keep delivering is immense. Massive investments in data centers and AI infrastructure are based on continued demand. If reality falls short, a bubble could burst. The story of 2026 then all down by ways. Austerity can and will bow. The story of AI Mao Wan Dao I. High rewards, but even higher risks. Investors should be ready for dramatic swings. While stocks often grab the headlines and dominate the news cycle, the bond market is quietly facing its own critical test, one that could have far-reaching consequences for the global economy. Governments and companies are borrowing at record levels, not just to fund deficits, but also to fuel the rapid expansion of the AI boom and other transformative technologies. The big question now is, can investors around the world absorb this unprecedented mountain of new debt, or will cracks begin to show? If demand for bonds falters, interest rates could spike sharply, raising borrowing costs for everyone from homeowners to major corporations. The Federal Reserve is expected to cut rates in the near future, but the sheer scale of rising debt may complicate the picture and limit their options. Higher rates would squeeze government budgets, forcing tough choices, and could slow corporate investment, threatening economic growth. Political pressure is mounting as debt service costs climb, putting leaders under increasing scrutiny and sparking public debate. In some countries, these fiscal strains could even crowd out private sector growth, making it harder for small businesses and entrepreneurs to thrive. The bond market's ability to handle this massive debt load is critical for global financial stability and the health of economies everywhere. In 2026, all eyes will be on whether the world can keep financing its ambitions, or if a reckoning is on the horizon. Ignore the bond market at your own risk. It may just be the most important story unfolding behind the scenes. 2025 was a breakout year for crypto. Bitcoin hit record highs, and mainstream acceptance soared. But the real story was regulation. New laws brought stability, especially for stablecoins. Traditional banks began exploring digital assets, signaling crypto's move into the financial mainstream. Now the focus is on comprehensive regulation to clarify which assets are securities or commodities. Clear rules will encourage innovation and protect investors. Risks remain, especially from leverage trading and volatility. As banks and big players enter, new safeguards are needed. 2026 will be pivotal as crypto matures from a wild frontier to a regulated asset class. The future of digital money is being written now. Trade uncertainty and tariffs remain front and center in 2026. Companies face volatile rules and must adapt quickly to shifting global policies. The scramble for critical resources, like water and rare minerals, has become a geopolitical contest. These materials are essential for tech and energy, making supply security a top priority. Sudden export restrictions can disrupt entire industries. To cope, leading companies are embracing scenario planning, preparing for multiple possible futures. This agility is now a must-have skill for survival. In a world of constant surprises, resilience and adaptability will separate winners from losers. The new global reality: expect the unexpected. Investor optimism is at a multi-year high heading into 2026, fueled by AI excitement and strong markets. But when everyone's bullish, the risk of disappointment grows. A single shock, like slowing AI spending or a trade conflict, could trigger a sharp sell-off. Herd mentality makes markets fragile. Some experts urge caution. Don't bet everything on one outcome. The wisest approach is to prepare for a range of scenarios: good, bad, and unexpected. The outlook for 2026 isn't a straight path, but a landscape of possibilities. Balancing hope with realism is key. Success will come to those who anticipate both opportunities and risks. In a complex world, prudence is the best strategy.